Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in, and thanks very much for listening. We are on a number of great podcasts, and my engineer has the list because I can't remember them. There's so many.
I do have the list.
Great. Awesome.
Would you like to hear it?
If you would, please. That would be awesome.
Yeah. Apple Podcast, it's Google Music, Play, Spotify, Spreaker, Stitcher, iHeartMedia, radio.com, and YouTube.
Okay, excellent. So if you are a podcast, and by the way, podcasting has become the du jour of the coronavirus. It just appears to me that everybody and anybody who's anybody is doing a podcast. It's gotten a lot more attention. What's your feeling on it, Daryl?
Well, first of all, there are only a few pure sources of information, and you can either read from those sources or you can make things up to match whatever you think or whatever your common philosophy is. So, I mean, I like to stay pretty close to the source.
I like it. And I listen to a lot of it. I listen to a lot of the TED Talks, and there's a few guys and gals that do mortgage related or real estate related. There's a lot of real estate people out there. And usually I go to LinkedIn or Facebook, join a group, and all of a sudden there's, another dozen or so people that are doing it. I like it. Like you say, it's to the source. One of the things I don't like about it is it's very difficult to fact check or to be able to verify what the people are talking about, especially if it's on a topic which is either political or in some other realm, difficult to nail down where the source is.
Well, one of my problems is everybody's trying to politicize this scientific issue,
Gosh, I hate that. I tell you what.
It's not good.
Well, it's like politicizing. Now, granted, mortgage interest rates, mortgage money, the availability of funds, this can be political in a heartbeat. And if you look at COVID, and if you look at since March, early March, when they began to realize what was going to happen and had to figure out a plan to be able to help those that were obviously going to either be out of a job or have less hours or any number of things, not being able to pay your mortgage, not being able to pay your rent, all the things that are, critical to the U.S. economy. Yes, that can be political too. And I think that not being political in my statement, I think the government did a great job and continues to do a great job, even though the football that has become this last, and it may be the last one before the election, bailout. It's not a bailout bill. What would you call it? What would you call the stimulus bill? It's not that.
Stimulus, financial stimulus, yeah.
Yeah, it's something like that. It was called the CARES Act, the first or second one, and this one, they're not quite sure what it is. But it looks like Munchin, and I believe last week we talked a little bit about the fight within the White House between Kudlow and Munchin as to where the dollars would be sent. But it looks like we're going to get direct payments to individuals. Now, I think they've pared down the list of people who are eligible, which I think is right. Certainly people in the mortgage industry should not be getting any more money. And to be honest with you, as I said earlier or in a different segment on LinkedIn, the mortgage industry is doing well. The reason is because, and due in large part because the Fed has kept interest rates as well as the Treasury low, because they've artificially pumped money into the system, either buying the treasuries or 10-year treasuries or mortgage-backed securities. And I believe we're at 50 billion to 85 billion a month, sparsed out between those two, that has kept the rates artificially low. However, that being said, what were what were they supposed to do? And what would you do? And I always ask people, I say, okay, you're saying this is a bad thing, but what would you have done and what would you do now? The problem right now is that we've, at the end, I believe Friday, the $600 extra a month, extra a week payment that we've been making beyond unemployment benefits, i.e. if you've lost your job and you're on unemployment, you get an extra $600 a week. I believe, is it $600 a week or $600 every 2 weeks? I forget.
I believe it's $600 a week, and I think it goes away. Yeah.
Right, and it goes away this week. And part of the package that they're trying to deal with now is what happens to that 600. So the direct payment, which is like the 1,200 that was paid earlier on, there'll be another round of that. But in as much as that's very helpful on a specific day when you get the check, the extra 600 to people who are out of work has really bolstered the economy from panic. And the last thing anybody wants is panic, especially in a country like the United States, the size of the country, the size of the economy. If you're putting that many people on the bench, i.e. they cannot work and they cannot get any money from their jobs, you better help them out, or else there's going to be a lot more concern in the streets and a lot more people who are just unable to pay their bills. And if they can't pay their bills, they can't pay the mortgage, they can't pay the rent, they can't, it's a snowball effect. So until COVID gets under control, this particular aspect of it is going to continue, and not having it politicized is really the best way to do it. And I think even though it is somewhat of a political statement, helping out where help is needed is really the issue. And I think the federal government has done a good job at doing that. Certainly it's not like it was back in 08, 09, 07, 08, 09 when the Great Recession is what they call it happened. And what we had at that time was a bailout of the major banks. And we were looking for an unfreezing of credit, which did not happen. And so what happened at that time is the banks just kept the money, either bought back stocks or bought treasuries, and kept the difference in the spread from the money, the amount of money they had to pay back at what interest rate to the amount of money they're making at the treasuries. So given that as to what it is, what is happening in the mortgage market today, let's get to a couple of rates, because I know that that's a good topic to talk about always, especially when the rates are this good. And as I said, the mortgage rate has been good for some time, gotten a lot better in the last 3 weeks, and it will probably stay this low for at least through the election, as far as I see. Okay, the 30-year fixed rate loan, 2.9%. The 15-year fixed rate loan, 2.56%. The FHA loan is 2.45%, and the jumbo is at 3.83%. All of these are at or near record lows. I still get calls from customers all the time asking me, can I get a loan? Now, I want to be able to, take advantage of these rates. And some of them have gone into forbearance. Forbearance is the, forgiveness for a while of not paying your loan. So there are ways, if you're in forbearance, to get out of forbearance so that you can take advantage of this. Point of this is most people who want to get a loan can get a loan, unless you don't have a job. If that's the case, you've got some issues. And as I spoke about last week to a customer who called, people who can get a loan can get a loan if they have a job. But people who need a loan because they don't have a job and want to take advantage of lower payments can't get a job. And what are we doing about that? And is there any solution for those types of borrowers? The short answer is no, there isn't. And that's a shame, because if you're going to take somebody from a 5% loan and drop them into a 3% loan, well, everyone knows it's $100 per percent per $100,000. So on a $200,000 loan, if you're lowering them 2 points, that's $400 a month. That's $5,000-$6,000 a year that you're going to be saving somebody. And over the course of a loan, that's hundreds of thousands of dollars. That's a big deal. So unfortunately, that's not the case. The non-QM products have not come back. In the show, we're going to talk some more about non-QM and some more about different sources of funding. Now, if you're in a situation where you want to buy something and you just can't get a loan, you have mattress money, or you have an alternative way by which you can prove income rather than W-2, yes, there are some players in the field, and I want to talk to you about them, give you an idea as to who they are and how you might be able to get into contact with them, and what kind of programs they offer, and what kind of solutions they might be able to offer short term. A lot of these loans are shorter term, 1, 3, 5, 7-year loans, but they are the type of loan that you can get if you're in that situation. And if you are in that situation and want to take advantage, get into a property and then be able to maybe flip it to more of a conventional loan in the lower end, just make sure that ability to repay is still the number one criteria especially when you're talking about this environment. And this environment is foreseeable, right? We cannot see where the end is going to be. We don't know when a vaccine is coming. So we're looking at Fed help, we're looking at Treasury help, we're looking at rates low, and obviously Fannie Mae and Freddie Mac are buying loans that are sold to them by lenders like Malibu Funding, the company that I work for, and are oh, we got another call right there. Anyway, I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Okay, I'm Jeff Barton, your voice in the mortgage industry. Thank you very much for tuning in. Thank you very much for listening each and every week. We are on a number of eight different podcasts. They are the big 8, and from Apple to Google to iHeartRadio, Spreaker, they're just a number of them, and we're really pleased. We're getting a lot of great feedback. There's something in the wind right now because not only is our attendance for people listening on our podcast going up, but our YouTube show, which we are shooting this for YouTube and it appears on YouTube, that's going up as well. And we're very pleased. And thank you very much for following us. Our YouTube is Jeff Barton, the Mortgage Voice. And we've got hundreds of shows, and we're trying to get our shorter versions, which are on LinkedIn and Facebook, up there as well. And yeah, we're on a number of different radio stations as well on the weekends, driving around. If you go to the hardware store, whatever you do at Home Depot, or if you're out there shopping around, you will hear our show. And we talk about mortgages, we talk about real estate. Those stations range from Las Vegas to Tahoe down to the Inland Empire. And hi, everybody. In all of those 3 places, our new affiliate is down in Albuquerque, New Mexico. And I wanted to say hi to them right away. You know, our Albuquerque people, maybe you are looking for a news source to be able to talk about loans, be able to talk about mortgages. And I wanted to really welcome you to the show. There are some, for the rest of the listeners around the country, Albuquerque is one of the top markets in the U.S. It's top 50, obviously. They have a population of about 1 million, about 915,000, and they have a medium income of about $65,000, and $204,000 is the median home price. It's a lot like Las Vegas in that way, although Las Vegas has really jumped in the last few years in terms of their median home price. And Las Vegas is a lot bigger city, but very similar in terms of, you know, the types of properties, the people, and yeah, it's a great place that you want to live, work, retire if you need to. Let's see, the monthly rents out there also are $1,226 roughly on average a month. Now, these are all averages, and these are all ways by which we look at cities when we're talking about lending. Lending in and of itself is it's an issue in some areas more hard hit than others. We do have a lower unemployment rate in the city of Albuquerque, but we've got some unique differences there that we don't have in other cities. The affordability there is obviously higher. So instead of moving, now a lot of people in California had moved to Las Vegas. And if you just flip it around and move down to Albuquerque or down into Santa Fe area, you might find that your dollar stretches further. Cost of living is a little cheaper, and the lifestyle is terrific. We live here in Southern California, where I live in the desert. Certainly Las Vegas is, and certainly down in the Albuquerque area is as well. Very similar in terms of the climate, and the people are terrific. So if you're in the mood to go down and see a great city, the plug for them is there. And I really appreciate the affiliate, really appreciate the people there listening to the show. We talked a little bit about rates earlier in the show, the 30-15. We talked about FHA and jumbo. All are at really historic levels on the low side, and that's a good thing. It means affordability for people who have a job. Now, what happens if you don't have a job? You have to search different areas and different places by which you can go out and get a loan. Let's say you have, what we used to call bank statement loans, or what we used to call is deferred asset type loans. Anything in the down payment assistance program. All of these are not traditional loans. So I wanted to talk a little bit to you about some other lenders. Malibu Funding sponsors this show, and I appreciate what they do. to do that. But Malibu Funding does not have the answers to everything. So there are some lenders out there who you might be able to use if you're in a situation, and I'm just going to go through them now. Athos Capital is a company that came back into the market. They did commercial loans, and they did a lot of non-QM, but they have come back to the market since being away for a couple of months, and they really do owner-occupied ITIN numbers. They do full doc, up to 85% LTV, things like that, super jumbo loans. They're really good lender, and Patty Kennedy is the person over there if you want to give them a call, and I've done business with Patty for years. The Pacific Capital Funding Corporation, they do 3, 5, 7, and 10-year ARMs, owner-occupied up to 90%, non-owner-occupied to 65%, 10 to 25-year terms. They're another good source. They're a little bit more expensive than your traditional loan, but you being a borrower that doesn't have a W-2, that isn't employed consistently or has other issues either with credit or some other thing, like I say, a foreign national, all these type of things, these are the types of companies that you need to go to. Now, we've talked about first deeds a lot on this show. The other product is, of course, the second, third trust deeds. Second trust deeds is a company out there called Equity Wave. Talked about them last week, talked about them on the Mortgage Minute show. Equity Wave does seconds. And what does that mean? So you have a first, and now you're going to try to take more money out. Let's say you didn't want to refinance your first because it's in smoking position that you got 2 years ago. You don't want to upset the apple cart because maybe your job is tenuous. You're still working, however, so you want to take money out of your house. This is what you do. You get a second trust deed, and Equity Wave is a terrific way to do that. Frank Curry is our guy over there. Give him a call. He's a good guy, and he'll be able to help you get that. Let's see. There's a couple others in here I wanted to get to. Pacific Capital, I just did. Let's see. There is. Hold on one second. Okay, Secured Capital Lending is a good group as well. Now, their rates are a bit higher. Now, these are not hard money rates. Hard money rates are still, let's say, 12 to 15%. That's what a hard money loan is, okay? These are half of that, starting at 6.5%, 7%. They do, let's see, they do direct to you lending, and they do the type of lending for no FICO scores required, commercial and residential properties, loans from 100,000 to 30 million, first and second trust deeds, kind of like Equity Wave on the second one, and construction loans. So if you want to build a house, or you went through a fire a couple of years ago, they're a good company to get in with, and you can give them a call over there. Let me see if I've got a name here for you. I don't know this company all that well. Bianca Flores is the account executive if you wanted to give them a call on commercial construction financing. That's the name of the company. And obviously there's a guy down there named Don Sanzma, and we've done business with Don before. We don't do a ton of commercial construction or residential construction loans, but there's a call for it. There's a need for that type, for the individual, for somebody who wants to build a house, build an addition, maybe add on, all these type of things, these home improvement projects that you need. You don't want to go to the FHA road to do the, what is it, 23K? Yeah, no, it's 203K. That's not 23K. 203K is the name of the loan. And so if you don't want to go that route, and you don't want to go to the FHA route, and you want to go a different kind of route, this is the guy. It's called Pacific Premier Bank. Don Sanzma, good guy, by the way. Let's see, Pacific Capital. Oh yeah, one more. This one just came in because it's very interesting. It's a foreign national bank. Their rates are really good, up to 65% loan to value, purchase and refinance, non-owner-occ, owner-occ, passport only, all kinds of things that you need for this type of a borrower, foreign national program. There's a lot of them done. We have an office down in Florida, and we do a lot of Brazilian nationals that come to the United States. Our loan officer down there is terrific, Cristiano, and he has a lot of contacts in Brazil, and they come here and they buy properties. And so it's important to know that you can have a source that absolutely does that. Guy named there, Robert Presswood, and he's a guy that you can call there. So of all these solutions that we've just talked about, and you won't see that on most shows because they just want to do rah-rah, we're the best. Me, I prefer to have you have the information so that you can get the loan that you need, because that's what the show is really about, is trying to help people, not necessarily I need to make $1 on every commercial. I I knew a lot of guys in this business for years. I think when I first started, there was a guy that did this, and he did it in Spanish, and it was taking advantage of a lot of borrowers. I decided early on that I wanted to just help people, want to be able to see if I can direct them to sources of funds if I can't do it or somebody else. That's the way to do it, and the best way to do it is try to provide that information. I really appreciate you listening. Thanks very much. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, and thank you very much for listening. We are on 8 different podcasts, the Big 8. We are on 5 radio stations in 3 states. We are on YouTube. If you go to Jeff Barton, the Mortgage Voice, you can hear this as well as hundreds of other shows. We've been keeping a vigil on LinkedIn as well as Facebook every day called the Mortgage Minute to get you updated as to what we're doing in the mortgage industry and how everyday events can affect you. I think the reason that we're doing that is because based on, I guess, the daily happenings on COVID, means that either you can get a loan, you can't get a loan. And why I say that is because certain industries are hit harder than others. And banks will have overlays based on the fact that you are in one of those industries. So in order to really understand it, you got to understand it on a daily. If you're out there looking for a loan, I have brought to the show once again a terrific person who really knows loans way better than I did and has experience way more than I do. It's Jennifer Conrad, and she's a processor loan officer for Malibu Funding. Jennifer, how are you?
I'm doing well, Jeff. Thank you so much for having me again.
Thank you very much for coming on. I'm going to hit you with a question right off the bat. How are you doing?
Okay.
How is it with all this?
I'm slammed. I'm so busy.
Yep. Yep.
And that's a good thing. Rates are low, and people are either wanting to purchase or refinance. So people are trying to take advantage of what we have going on right now.
It's as busy as I've seen it in the industry the years that I've been in it. Is there a downside to any of this other than it one day is going to end?
I think the thing is, it is a bit more challenging, like you kind of were talking about in the beginning. It is a bit more challenging trying to get the loan because we do have more overlays. I'm not really seeing too many lenders that are wanting to do a loan below a 640 credit score.
Right.
And also, the best rates when we're talking about like a 15-year loan, a rate that's at 2.75.
Right.
Or a 30-year fix that's at 3 or 3.25. I mean, of course, they're looking at the fact that they want, the higher credit scores. We want to have people put a little bit more money down, or if it is a rate and term refi, we want it under a 70% loan to value. But yeah, those options are available. And again, like I said, they want the higher credit scores. But other than that, that's the challenge that I see. If people are trying to purchase or refinance. The other thing is if you're working as one of our essential workers, like, working in a grocery store,
Sure.
Driving Uber, things of that nature, I am noticing that the lenders want us to almost verify and re-verify and then re-verify again, that you have not been affected income-wise by everything that's going on.
Yeah, that's interesting. I know that it used to be that the credit was pulled several times. Now it's the verification of income as well. And they not only contact the boss, but they contact, the employer several times during the process. How is that received by the employer? Or are they understanding of the whole process, that the difficulty that the lender has?
Actually, I've noticed that people have been very understanding. And I do kind of start off by letting them know, it's not our usual process to have to do this, but our borrower is, in the process of refinancing or purchasing. And in light of the situation that we're going through, we just want to make sure that they're still employed, that nothing has changed. And, I might tell them, I'm going to contact you, maybe 5 days before we close, and then I'll have to contact you again within a day of us funding. So I think, if you kind of set it up that way, people already knowing what to expect, and it's not like you have to go through the full process of asking for all of the income, and all of that information when you're doing your follow-up. You're just basically, hey, is everything still the same? Everything is still the same, and verifying that.
I've been to a number of public venues with a mask on and really trying to protect myself. But when you go to some place where they're checking your temperature, then they ask you a series of questions, then you're allowed admittance. It's kind of like that in the loan world too, where you have to not only prove income, you have to approve this source of income that it's going to continue, and then they verify it several times along the way. It makes me think that they're both very similar. Do you think it's because obviously it's because of COVID, and because of COVID, certain borrowers are shut out of the process because they're either in forbearance or they just don't fit into the box? What do we have, or what do you have for borrowers like that?
Well, we do have more lenders that are coming back into sort of the non-QM.
So, yep.
Now, as far as like the loans being in forbearance, the lenders don't mind us showing that on the credit report, but they are asking that you at least still make the payments. If you have not made the payments, then you do have to make 3 consecutive payments before they will allow you to do any type of refinance. It's just that simple. So I noticed I've run into a couple of borrowers who said, hey, I'm still paying it, but my lender said that, I'm in forbearance. I don't have to pay it, but I've been still paying it. So if their credit report says that, but then I'm providing evidence that they're still paying it, then, it's business as usual. We can go ahead and do a refinance. It's not a problem.
That's good. And because of the COVID situation, I mean, the difficulty we have always is to be able to follow the rules, submit the loan, get it closed in a timely fashion. Do you see that there's any interruption at all because either the industry is under some sort of siege, or it's uncertain in terms of their employment? Or do you see, as you just said, it's full guns as long as certain criteria are met? I'm just trying to see if this interruption.
I feel like, yeah, it's full guns. I don't feel like there's any interruption in that case. I do feel like it's taking longer because everyone is flooded. Everyone wants to take advantage, of the opportunity. So it is kind of interesting that the credit score requirement is higher, and it almost seems like the lenders are documenting more and asking for even more. However, so many people, still like to take advantage, are willing to provide whatever in order to be able to get the loan. So, in some cases, I'd say, if a person is dealing with a situation where we have to do what we call a non-QM loan, which might mean that they have to do a bank statement program. Maybe they don't show enough money on their tax returns, but they get most of their money by cash or, directly into their business bank statements and personal bank statements. Those are considered the non-QM loans. We're looking at easily 12 days just to get our initial approval, and then, another 7 days to clear conditions. So you're looking at a good 45 days to get that one from beginning to end. And again, it's out of our control, because it's based upon, how fast the lender is working, but it's just because everyone's at max capacity.
Yeah, I agree with that. I mean, we're having difficulties just getting some rapid rescores done by the credit bureau, or not the credit bureau, but the credit company, just because they're so busy. They're like, okay, we're working on the 9th. The 9th? It's the 19th. How long before you can get to this thing? It's really a stress on the system. Listen, we're coming to the end here, and I wanted to make sure that people got a hold of you if they need a terrific loan officer. If you could shout out your name, number, any way they can get in touch with you, that'd be great.
Sure. My name is Jennifer Conrad, and you can either reach me at the office, 818-719-9901, or you can call my cell, 773-593-6831.
Jennifer, thank you very much once again, enlightening and giving us the information that we need to make loans better and easier for people. Thanks a lot.
Thank you so much for having me, Jeff.
Okay, bye. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening, and thanks very much for tuning in each and every week. We're on 8 different podcasts, the major big 8, as well as the 5 radio stations in 3 different states, from Las Vegas to Tahoe to the Inland Empire down to Albuquerque, New Mexico. The show is also shot for video. Jeff Barton, the mortgage voice, that's where it is. If you go to YouTube, you can see this as well as, hundreds of other shows that we've done over the years. Certainly during the COVID crisis that we've been having, we also do a 1-minute mortgage minute every day on LinkedIn as well as Facebook. And if you'd like to clue in, just go to Malibu Funding. That's the company that sponsors the show, the company that I work for. I want to appreciate their help in bringing the message out to everybody as much as possible. It's a solutions-based show. Earlier in the segment, I think I listed 5 to 7 different lenders who do quirky, different kind of loans, seconds, TIN numbers, anything that can help you as the borrower. That's what the show is all about. We're going to bring to the show right now somebody who has never been on the show and is new to us, and I really appreciate Sandra coming on. It's Sandra Nelson, and she's at Huntington Mortgage, and this is her first time on the show. She's going to do some business with Malibu, and I wanted to get her on. Sandra, thanks very much for coming on the show. How are you?
Great, Jeff. Thanks for having me.
Thanks very much. Now, could you tell people who are listening in the audience where your office is, or where you do most of your business, and a little something about you, just not only to educate them, but also to let me know so that, I know a little bit more about you.
Yes. So I've been in the industry for about 15 years now, and I started off as an originator. I currently have an office out in Pasadena, in the city of Pasadena, and then I have a local office in Northridge. That's where most of my appointments are, because I service all the San Fernando Valley.
I see. Very good. During the COVID situation, what's the main problem you're having getting borrowers financed? Or are there any problems?
I think during this time, I think communication is key. Some of the challenges that I'm seeing right now is just making sure that we educate our clients as far as how important it is to make sure that we know how to verify employment. And I know that certain things are out of our control at the moment, but at the same time, if we can educate our clients and letting them know that whatever we have on our application from beginning to end, it needs to remain as far as income. So if there's any changes as far as hourly pays or being able to be employed by the same company, if they have a leave or anything like that, that's going to hinder their ability to close. So that's one of the challenges that right now that we're seeing due to COVID, and that's certain things. Those are some of the things that are out of our clients' control right now.
Yeah, I agree with that. I think the proving income over and over again to either a investor or a lender, if we're brokering a loan, does it bother your borrowers to continually have to come up with that kind of documentation or proof, or do you not even bother them, just go direct yourself?
You know what? I think that from the feedback that I get from my clients is the more that they're informed in the beginning, and I think that there's a power in educating our clients so they know the process, and a lot of it is done by the lender. So obviously there's certain documentation that's collected from our clients, but at the end of the day, it's the lender that's verifying this information on the back end to make sure that they feel comfortable with financing that loan. So I think education is key, and just giving our clients a good heads up is where the key to a successful refinance or purchase is.
A good question. A good question next is refinance or purchase. What are you doing more of now?
You know, right now with rates being historically low, I mean, they've hit since the month of May. I mean, they've dropped so much, and we haven't seen this maybe trending back in 2012 we saw something like this. But from what we're seeing right now, there's just so much health that's keeping the rates so low. So right now banks are being inundated with refinancing, and people are taking advantage of that because with the rates being this low, we don't know. We feel like we're still going to see this trend, but we don't know how long we're going to see the rates be this low. So right now, banks are just completely busy with refinances. So that's one of the other challenge. As far as a challenge would be just timing, is just making sure that files are complete so we can meet the close times as far as on any refinance or purchase. But yeah, people are refinancing because rates are historically low.
Yeah, and I agree with that. The timelines on all this stuff are extended, right? Because banks and lenders, they're just really busy. So are you telling real estate agents, if you're involved in a purchase, hey, look, 30 days is probably not going to happen? Or how do you deal with real estate agents in a purchase situation when you've got so much business in the system that it's really a lot slower than it should be?
Once again, it's just communication. I think that if we set the expectations from day one, as far as, what also on the broker side, we have the ability to use a lot of lenders, and each one is going to have their own timeline. So it's just communicating with the banks and communicating with our real estate agents. So when we're submitting their offers, we can make sure we can meet those timelines that we're signing contracts on. So I think that PM, I'm typically seeing we can close in 30 days. If in most cases, if we need to close in 45 days, I haven't seen any pushback from sellers. Because some of these sellers are on the same boat. Everybody's dealing with COVID at this time. We're dealing with appraisers trying to go to properties and do inspections, and we want to make sure everybody's kept safe.
No, I agree with that. And the fact is that you're right about the sellers. They are very well aware. And I think a lot of sellers are very grateful that there's a buyer out there for their home. Even though the inventory is really low, even though prices have remained steadfast, we get predictions that prices are going to drop by 6.5% between now and May of next year. So maybe they're grateful that they have the bird in the hand, so to speak.
Absolutely. I agree 100%.
Okay, so the major challenges that you have in this particular market because of COVID or because it's just so busy are what when it comes to interviewing clients when they come in the door? What are you telling them about programs if in fact they don't have regular income, if they're looking for more of a non-QM? Do you deal with that, or do you push it out the door? I mean, how are you dealing with that situation and those type of borrowers?
Yeah, so we do have programs. Obviously, every client is treated very differently depending on their case. So we do have some borrowers that may not qualify using their tax returns, or they may not have their pay stubs. So there are programs out there where we can look at bank statement programs. So we look at 12 to 24 month bank statement programs where we can qualify that type of client that doesn't qualify showing their regular income on a W-2 or tax return or a pay stub. So there is a program depending like a boutique. It's like you walk in and every case is going to be different, and we just need to figure out which program is going to meet that specific client. Okay,
that's great. And do you have a lot of those type of clients that come in the door? I know depending on where you do and what kind of business you are, certain mortgage broker companies or shops, as we like to say in the business, they concentrate on a certain thing, whether it's an FHA borrower, whether it's down payment assistance. Do you have a niche, or is it what they call in the lawyer business open door, meaning anybody that walks in the door is your client?
Yes. So there is an open door policy. I don't say no as far as setting up a Zoom call and reviewing, what a client, if the client wants to qualify. Although I do have a niche, and that I work a lot with first-time home buyers. I work a lot with returning clients. I do a lot of FHE business, a good amount of my business, because I deal a lot with first-time buyers. They're coming in with small amount of down payment. So with these programs, there's a lot of cushion to help with closing costs, and the rates are so low. So it's definitely been my niche for many, many years. But with the rates being this low, it's just right now it's just about helping everybody. A lot of my clients are also W-2'd, and they have pay stubs. So I have the program available for bank statements, but I don't get a lot of that I don't have a lot of calls for that program.
Hey, Sandra, could you shout out your phone number, a way to why people can get in touch with you and really talk to an experienced, dedicated loan officer like yourself? Would be great.
Yeah, absolutely. You guys can reach me at Sandra Nelson. My phone number is 818-675-2474. My email address is sandranelson.loans@gmail.com.
Sandra, thank you very much for coming on the show. I know it was pretty short notice from yesterday to today, but I really appreciate it. Thank you.
Oh, thanks so much, Jeff. I appreciate you and your team. You guys
Thank
are
you
awesome.
very much. Oh, thanks a lot. That's Sandra Nelson from Huntington Mortgage. I'm Jeff.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening to the show. We are on Big 8. That's right, the Big 8 podcast out there. Daryl, you got that list for us there?
I certainly do.
Excellent.
It's Apple Podcast, Google Music Play, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, and YouTube.
Yes, and if you want to hear us, go to any of those terrific podcasts. I did it the other day. Sounds great. The show comes in nice and clear, and they're archived in all those places as well. We're also on YouTube. If you go to YouTube, my YouTube channel is Jeff Barton, The Mortgage Voice, and you can hear this as well as many, many other shows. We're also on LinkedIn and Facebook each and every day, and that's a Mortgage Minute, which is part of The Mortgage Voice. And of course, if you want to hear us live on the, well, not live, but I guess the show's live, on 5 different radio stations. I guess it's more like 8 or 9 because some of them have AM, FM affiliates. But regardless, if you do, they're in 3 different states from up in Tahoe to Las Vegas to the Inland Empire in California, all the way down to Albuquerque, New Mexico, our newest affiliate. And I love Albuquerque. I want to get a bunch of people from there, that area on the show. We've had a number of people from Vegas, actually all over the country. Malibu Funding, the sponsor of the show, they're in 10 different states. So from Florida or Georgia back east to Illinois in the Midwest to Texas and Arizona down in the Southwest, we certainly cover a lot of the U.S. And there's been a lot going on. And I think in areas that have been affected either by COVID or by, you know, whatever's going on in the Black Lives Matter movement, whether it's a pro or con for your neighborhood, there's always changes in the real estate world. One of the things that hasn't changed in the real estate world is prejudice in the housing market. Back in '68, we had the Fair Housing Act passed, and that was supposed to be the last vestige of, you know, and maybe some of the people who are listening to the show have heard or seen on their title reports things like no this group allowed, or no that group allowed, or these people can't live here or buy here. That and you can imagine the language used, and it's unbelievable, but the language is still there in a lot of titles, especially on older properties in older U.S. cities. That's all been null and void for years, and it doesn't negate the title, but those clauses have been X'd out. Well, one of the things that I constantly look for, and we deal with it in Malibu Funding all the time, is prejudice, bias, and out-and-out denial of a person's right to be able to live or borrow money. Live where they want and borrow money if they can afford it. So in a place where you might not think it happens, I read an article yesterday, and it just struck a chord with me. So I wanted to bring it up because if it's happening to you, get on it, because it's not right. So what happened? Okay, there was a couple in Long Island. It was a person of color trying to buy in a neighborhood out in Long Island. Now, Long Island is huge, right? We're talking a huge area. But the person who originally developed the area, Moore, he developed it to be a segregated area. And we're talking post-war. So recently, this is within the year, couple goes out to buy a house. So the real estate agent directed them to one of the 12 areas where people of color live, not the 119 areas where they don't live. So the couple was not happy about it because they didn't understand why they couldn't see a house in a certain area or were directed to this house in this area. So they got a hold of a couple of lawyers. And what the lawyers did, rather than come out with a very angry response, what they decided to do was to have, now everybody knows what what do they call it? Not a magic shopper, but somebody who goes and shops for other people or shops to see what prices are in different stores. Well, they did this with, it was like an experiment. It's like the Stanford Binet IQ test, right? Where they would have double blind and, people of a certain look and persuasion. So they did it like this. They sent persons of color to certain real estate agents' offices on Long Island. And then they would send a person not of color to those same real estate offices, and they both asked to see the same houses. They had the same financial qualifications, they had the same income, they had the same needs in a house. So identical people on paper, right? The same. However, when the real estate agents looked at the people, they would direct them to certain neighborhoods on Long Island. In the business, this is called steering. It is discriminatory, it's against the law, and if it's happening to you, or if you think it's happening to you, hey, you can call me and I'll help. Or you can call an attorney, or you can call them on it immediately. You don't need someone to rescue you, you just need to have your rights protected and be treated like everybody else, because that's the law and has been the law. Really, it was the Voting Rights Act in '64 and the Fair Housing Act in '68. Both of these things were, Lyndon Johnson was the president at the time. Anyway, so what happened at the end of all this? The story is that once it was clear that the real estate agents were steering clients based on the look, the ethnic look of the person to certain neighborhoods, they then filed suit, and it's pending right now. It shows you that even in this day and age, now there have been many people who have said during this Black Lives Matter movement that that these are bad actors, these are bad apples, these are, well, systematic racism in housing, which has been going on, as I mentioned, in deeds, as I mentioned, in practice, 2020 this was going on, all over the country, is systematic. And to be pointed out and stopped is the job of people in the industry. Even though, people in the industry tend to direct people, especially in that Long Island case, to neighborhoods. No, we don't know why they were doing that, but it's illegal. I don't know if those people were racist or they were just trying to put people together they thought would match. I don't know. But I tend to think that by doing that, they're degrading the ability of people to be able to live where they want and live how they want. And that's at the crux of the Fair Housing and the Fair Lending and the Voting Rights Act that were passed in the 60s. We here, my company, me, we are constantly battling a lot of forces to get people loans. The one that you can't fight are the systemic way that people are looked at in housing, in lending, and in voting. And all of these things are not political. These are rights that we all earned, that we all have, and that we all need to respect from one another. And those are my convictions here. Try to pass it on to my kids, do all the things that are right by the law. There's no heroes here. It's just doing the right thing, Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry. I really appreciate you listening to my little speech there. It's a passion of mine to be able to bring fairness to the lending industry. I know so much about what we do is numbers crunching. But there are times when you look around and you go, wait a second, this is not about numbers. This is not about whether the person can afford it. This is about something else. And to be able to help people get what they've earned, i.e., you're a citizen and you have a right, that's what is supposed to happen. And so I'm Jeff Barton. I'm your voice in the mortgage industry, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.